Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. This is my repeat guest, Rahim Madhavji from Knightsbridge FX. Rahim, tell everybody a little bit about yourself, what you do, what your company does, and then we're going to jump into the future of the Canadian dollar or the US dollar, depending on which side you're looking at. And then, we'll go from there.
Well, thanks a lot for kind of having me on, and great to see your whole platform growing, leaps and bounds. It seems like you're doing, obviously a great job. In terms of my background, I left capital markets over 10 years ago in mergers and acquisitions, private equity, basically started Knightsbridge. We're a currency exchange company and we give better rates than the bank. And it basically built out this business, and we've been fortunate to basically survive the pandemic. We're doing relatively well, one of Canada's fastest growing companies over the last several years. So very excited about, how things are going to look in the future. And we basically take on the banks and just try to give better rates.
Yep. And it is a great service, and it's all online, which is very handy. You don't have to actually go into a branch or anything like that. I like the online services, and I personally endorse Knightsbridge. I use them. We do a transaction with them almost every week. So very, very active with Knightsbridge. Let's jump into the Canadian versus the US dollar. What do we see going on in the future? Like, if I have both Canadian and American money, which way should I be going? Which way should I be thinking? What kind of things are affecting this?
Yeah, for sure. So I'm happy to kind of give just the broad general outlook and how things are going. It's not financial advice, so everyone kind of needs to obviously make their own decision. But in terms of just like a big picture, in terms of what's basically happened, in March 2020, when we had kind of COVID first start, whenever there's a risk off event, as in there's worry or panic in the market, the stock market generally goes down, the US dollar typically goes up. So that's basically what happens in terms of like historically looking at things. So obviously the US dollar went up, and then things basically got better. The Canadian dollar went back up as well, throughout from 2020 to 2021. And things were looking pretty good for the Canadian dollar until the latest variants kind of hit the market in the last, couple of weeks, right? So the Omicron virus. And there was a lot of uncertainty with how potentially deadly it is and how much it basically spreads and what the impact is that's going to be on travel and restrictions and all that type of stuff. So we saw the US dollar basically rise a little bit as a result of that. We saw the equity markets get a little bit rattled as well over the last couple of weeks. And that just follows the same trend as whenever there's a risk off event, US dollar up, equities typically down, commodity prices typically down as well. And the view is generally that aggregate demand generally falls in those types of events. So I think in the short term, because we have Omicron, I think there's going to be a little bit of uncertainty as to how everyone reacts over the next 1 or 2 months. And I think people are going to look to South Africa to kind of see what happens with cases there, what happens with hospitalization levels, et cetera. Now, I'm not an expert on COVID, and I don't presume to be, but that's kind of one tell I would look at, is to see the canary in the coal mine is wherever it basically first started, what is really the impact there? And then secondly, over the longer term, I think if you look at what's happened over the last 1 or 2 years, we've had a couple of different waves and a couple of different variants, and we seem to kind of survive it okay, as in, we kind of panic a little bit, and then life kind of moves on, and we either get financial support from the government or from the Fed or the Bank of Canada to kind of stabilize things in terms of financial markets. So it seems like there's a bit of a safety net on the worst case scenario, assuming we follow the same pattern is kind of what I see. So I think in the short term, there's going to be a little bit of volatility just with the media headlines and not knowing exactly how bad Omicron is going to be, et cetera. But I think longer term, the trend over the last year and a bit is still intact. I think the economy is doing well. Unemployment numbers are low, and it's hard to find kind of labor, and it's driven largely by some form of aggregate demand basically increasing. So we're looking to see GDP growth rates of 4 to 5%, basically this year and next year. And those are pretty good numbers. And typically the Canadian economy overshoots or does well when there's risk on. So commodity prices typically run up, and we saw oil get to about $80 a barrel or higher than that. And when there's a risk off event, it dropped back to about 60. But I think if we can get past this latest variant, we'll resume an uptrend in oil prices, resume an uptrend in aggregate demand, because the economy is so hot. And I think that bodes well longer term for the Canadian dollar. There's two key things to look at next year, which is basically which central bank is going to raise rates first and how often. And I think the Bank of Canada will go first, and it's likely going to be in and around April, assuming Omicron doesn't rattle the cages of everybody. Yeah. So the Bank of Canada will go first. I think that'll be bullish for the Canadian dollar. I think the US Fed will follow in some part of Q2, and also start to raise rates as well in a similar kind of fashion. And I think that'll counteract a little bit of what the Bank of Canada does. So I think if the Bank of Canada goes first and often ahead of the Fed in terms of the number of rate hikes next year, the Canadian dollar will do better. So generally, when the central bank raises interest rates, their dollar improves. That's basically what happens. And generally, Canada and the US follow in line. They don't go too much off course. But I think the Bank of Canada will go first, and they will go sooner. I don't know if they'll go more by the end of the year, but they'll definitely go sooner. So I think the Canadian dollar will do well. And but I think we'll stay within a range of between 122 to 128. So we're closer to about 126, 127 right now. I think on potentially the max downside is probably in and around 130-ish. If Omicron continues to take hold, I think the US dollar will go up. I think if people if we get past this phase and we get into kind of April of next year, I think we'll see the Canadian dollar rally in advance of that, because the expectation is the Bank of Canada will raise rates and things are back to a risk on event, and we'll see the loonie continue to rise. That's the kind of framework that I generally look at. I think we'll be in a range of basically between 122 and 128, and get down to about 130 in its kind of worst case form. But I think the longer term trend of the loonie rising is intact, as long as the economy and everything is doing well. If we ever have a recessionary event, a virus that we cannot control, and further types of shutdowns, then we see the US dollar basically rise. So that's basically how I kind of envision looking at this.
Okay. So just to sum it up, make sure I don't have this all wrong. So if you were going to go and move some money to the States, and you're doing it in short term, you probably should do it sooner than later, because right now with the exchange rates, with the Omni, it's going to be making the US dollar get more expensive. So if you're doing short term, then you probably should do it sooner than later. And then if you're doing a little bit longer term, you're probably better to wait for the Canadian dollar to get better, because it could go down to 122. Do I have that right? Kind of?
You kind of interpret basically what I mentioned. So I think, yeah. And I don't think there's a perfect answer, but I think the way I would look at it is to say, there's one thing in terms of like trying to guess where the rates would go. And then there's the other fact of like business just needs to get done. Like people want to buy real estate, or they got to pay their expense. You still have to do those things regardless of what the rates are. So like from a longer term example, I do think we will get back to the 122, 123 range of the Canadian dollar appreciating a couple of cents more from where we are today. I think that will happen at some point in 2022. When exactly that happens, hard to tell. It's hard to put business aside as well for that. Are you going to miss a property deal? Are you going to miss any tuition payments? Are you going to miss whatever expenses because you want to wait for a better dollar? And there's obviously the chance that that's wrong and things go the other way. So typically, I generally would buy US dollars when I need to make that basic payment. So if I were to be buying a property deal, or I were to be having a need for US dollars, I try to take the fluctuations out of it in terms of guessing. So despite everything I basically mentioned, I try to say I buy when I need it and I pay my bills and I move forward with business, because I'm of the view of over the longer term, whatever investment or anything else that I'm trying to make, whether it's in equities or anything else, will generally outweigh the fact of trying to guess and time the market and trying to miss a year, right? So you wouldn't want to have not purchased equity, trying to wait for the US dollar to kind of get a little bit weaker because the equity market did so well, right, in terms of 2020 and even partially in 2021. So I think you try to separate it from the kind of that perspective, and I just try to kind of move forward. So I do think the Canadian dollar will get better at some point next year. Whether you really want to push away expenses for that difference is a decision you kind of really have to make.
Yeah, if you have the deal, that's great advice. If you have the deal, do it, because you're going to make more than that exchange difference anyway. So why? Right. Well, cool. Anything more to ask you about that, or should we move on to the Knightsbridge side?
No, I think just generally, I think, try not to get too caught down in the exchange rates. It's, while it does have a big impact, it is kind of a small part of generally whatever investment or equations you're doing. It's also outside of your control. You're not going to control the virus. You're not going to control bank interest rates. And there's a ton of really smart people that do this for a living every single day, trying to guess where it's going to go on the trading floors of the big banks. It's pretty hard to outsmart them. Is generally the view that I kind of look at it. I mean, everyone kind of likes to have a view and what they think, and some people like to gamble with it, but that's sometimes what you're doing when you're playing around with this type of stuff.
Right.
And that's kind of exactly how I look at it. So just business as usual, move forward with business as usual and try to factor these things in, but it's generally a small percentage of kind of the equation.
Yep, it makes sense.
Kind of, yeah.
Awesome. Before I let you go, let's talk a bit about Knightsbridge and what it is, how it works. So people who are interested in investing in the US and interested in moving some money around, some of the advantages it has over other options.
Yeah, sure. So basically, we're a foreign exchange company, and we basically exist because we believe the banks are hosing everyone on exchange rate. So if you go to your bank and you go to buy, $10,000 US, the exchange rate you're going to see today might be 130, 131, something of that sort, 2 or 3 cents of what you would see on the news or on BNN or on Bloomberg. So whatever you kind of see online in terms of the mid-market rate, you typically add about 2 or 3 cents to that number, and that's basically what you what you see. So the banks add about 2 or 3 cents to the market rate. That's basically how they're making money. And we typically come in and undercut that number. So we're typically on average, under 1%. It ranges, somewhere between, 0.5% and 0.8%. It varies a little bit based on the dollar amounts that you're doing, but we should be able to save you about 1%, 1.5%, sometimes 2% compared to the bank, depending on who you're banking with and what currency you're buying. So you go to your bank, you get a quote, say, I want to buy 10,000 US or sell 10,000 US. What's your rate? You come to us, you say, hey, what's your rate? You compare the difference. If the difference is worth doing business, you do business with us. If not, you use your bank. You can keep your bank honest. And, we can move the money from your Canadian to your US account if you've got 2 banks in Canada. There are some complexities depending on which bank you're starting with and ending with, depending on how you're sending money and receiving money. But ultimately, the starting point is just saving you on the exchange rate, and then we basically kind of go from there.
Yeah. So it's basically an all online portal. The way I do it, at least, is I make a phone call, set up the trade. Depending on which money I'm sending from or which bank I'm sending from, it's going to be either a wire or I can do a bill payment from some of the banks. Get you guys the money. Different ways of transferring money takes different times, but your rate's locked in, and then they can send it right to the closing company, to your corporation in the States, wherever you'd like.
Your personal US account. We can also debit and credit your accounts in Canada. I think the best is first figure out that you're saving money on the exchange rates. That's kind of the hook, where if you're saving enough money, then you'll start to inquire a little bit more. And then based on your sending and receiving banks, we'll walk you through the best way to do it, depending on what fees you want to pay or not pay for speed.
Perfect. Thank you for coming on the show, Rahim. Before you go, you want to just list the website for Knightsbridge, and then
Sure. Yeah. So our website is knightsbridgefx.com. We do have live chat on our website as well. If you have any inquiries, you can obviously give us a call or set up a meeting, and or obviously send us an email and basically take things from there.
Perfect. Thank you for coming on the show again. I really appreciate it. I'll probably have to have you come back at least once a year. So we're on year 4 now. So yeah.
Yeah, it's been great chatting with you. It seems like things have kind of come a long way, and wish you luck in the new year and happy holidays.